Good afternoon, guys. I just wanted to touch base on the Dow Jones. So this is going to be a 3-minute breakdown on the Dow Jones and the index right now. So I've started with a very long-term Fibonacci. I'm way out on the day chart. We're talking all the way to May 2016 when this double bottom happened. So that's where I've started my Fibonacci. You can see the levels all the way through to the high. So what we had just recently in the retrace that everyone was talking about a few months ago is just a 23 touch. The market came back, did a 23% reversal, came back up. Now, typically in a trending market, the market doesn't touch the 23 a whole bunch like it's doing right now. It usually just bounces off the 23 and continues, or it'll retrace all the way down to the 38, bounce, and then just continue. It doesn't have a lot of hesitation like it's doing right now. And again, what I mean by hesitation, if you guys aren't familiar with that, obviously I'm just talking about the consolidation, and it's really a forced consolidation pattern. And you can see that really represented. If I were to throw in a trend line here, you can see that pretty easily. There's our forced consolidation, mini breakout, and a mini move. So if we just go ahead and add a Fibonacci into, so if I take the low and the high of this 23, so I'm going to delete this larger and bring in a smaller building here. What's really interesting about this is the market popped right off the 23, came all the way back up, touched on the 61, all the way back down to the 23, then hit the 38, back down to the 23. I'm calling the 0, by the way, this is the lowest part here. This is our long-term 23. So again, retrace to the 23 here, retrace to the 23 here, retrace to the 23 here. So we have 3 touches on that low. It's represented by 0 here on this Fibonacci. First time we went back all the way to the 61. Second time we went back to the 38%. Third time we went to the 50, back down to the 38, and now we're 61. So very interesting little setup, and I'm starting to really like this. Dow Jones doesn't always follow Fibonacci. These stocks don't always follow the Fibonacci rules, but because major investors are coming in, it's starting to obey these types of patterns. So if we were to throw in a trend line here, you can see now we have a forced wedge pattern that we're literally sitting on. We have a resistance on the high of that 61. If it gets into there, I wouldn't be surprised for a double top. I wouldn't even be surprised if it continued to go. And of course, if that's the case, the US dollar should not fall like it does, like it's showing, excuse me. If the US dollar does fall, though, this should not only break this 38, but it should also break this low 0, the long-term 23, and then we have a continuation. So keep your eyes peeled on this, guys. That's your 3-minute breakdown. As always, reach out to us if you have any questions. Thanks a lot.